Good morning, everyone, and thank you for joining us today. I'm excited to introduce our presentation on a very important topic: scaling credit access through technology, the Mannjal seed funding case. This is the first of 10 slides, and it sets the stage for what we'll explore together. Today, we'll look at why this news case is a must-learn for students, faculty, and industry stakeholders alike. Mannjal exemplifies how innovative lending technology can bridge systemic infrastructure gaps in credit distribution, especially in the priority sector. We'll also examine how Fintech and bank collaboration models, workflow automation, and strategic shifts from consumer apps to institutional infrastructure are shaping India's evolving credit landscape. So, let's get started and discover the critical insights this case has to offer. On this slide, we're highlighting our full-stack lending infrastructure, which seamlessly integrates workflows, data intelligence, and decision-making systems. This core innovation is designed to enable the efficient distribution of priority sector and impact-linked credit at scale, making it easier to reach underserved communities and support impactful projects. We've addressed a significant problem in the lending space, streamlining processes and improving decision accuracy to unlock more funding for vital sectors. In terms of our investment leadership, we have strong backing from notable partners like Gemba Capital, Sparrow Capital, B Capital, which is our co-lead, and Arali Ventures, our lead investor. A good example of our progress is Bengaluru-based Mannjal, which secured USD 2.1 million, or INR 17.5 crore in seed funding within just 18 months of launching. To sum up, this slide encapsulates our innovative approach, the problem we're solving, the key investors supporting us, and a tangible achievement demonstrating our momentum. All of this ties back to our overall goal of creating a scalable, impact-driven lending platform. Let's take a closer look at the core platform components that make all of this possible. First, at the foundation, we have our physical and digital data collection infrastructure. This is where everything begins, gathering accurate and comprehensive data from various sources to ensure we have a solid base. Next, we move into loan origination, which is about creating streamlined end-to-end application processing workflows. This helps us process applications efficiently, reducing manual effort and speeding up decision times. Following that, we have credit decisioning, where risk assessment and approval automation come into play. This is the heart of our platform, enabling smarter, faster risk assessments by leveraging advanced analytics-ready borrower intelligence. Finally, all these components work together to deliver a seamless experience for our users, ensuring that data flows smoothly from collection to decision-making. And behind all of this is a talented team, our co-founders, who are leading the charge. Harshit is driving product development and market execution, Aman is architecting the platform technology and integration, and Prashant is shaping the strategic vision for transforming lending infrastructure. Together, these foundational elements and leadership ensure that our platform isn't just a set of tools, but a comprehensive solution for modern lending. Let's take a closer look at some of the key challenges we face. The result of these issues is low sanction ratios and longer turnaround times, which ultimately hinder credit inclusion. Financial institutions are finding it difficult to efficiently distribute the mandated priority sector credit at scale, which is a critical goal for us all. One major problem is inadequate data enrichment. When the data we have is comprehensive or detailed enough, it leads to suboptimal credit decisions and risk assessments. This often results in either denying credit to deserving borrowers or taking on unnecessary risk. Another challenge is poor borrower profiling. Relying on manual processes makes the entire loan processing system slow, prone to errors, and creates operational bottlenecks. This delays decision-making and hampers the overall efficiency of credit distribution. Additionally, borrower information is often scattered across multiple disconnected platforms and physical records. This fragmentation makes it difficult to get a complete, accurate picture of each borrower, further complicating the lending process. All of these issues point to a broader infrastructure gap in India's lending ecosystem. This gap hampers our ability to serve borrowers effectively and to meet the priorities set by policy. Addressing these interconnected challenges is crucial for improving our lending infrastructure and expanding financial inclusion. Now, let's take a look at how advanced analytics can really transform underwriting and approval processes. By leveraging decision support tools, we can make smarter, data-driven choices quickly. One of the key aspects is integrating external data sources, which provides us with a more comprehensive view of each borrower, beyond just the internal data we typically have. This helps improve the accuracy of our assessments. Next, we have profile enrichment, which allows us to customize insights based on the specific needs of risk teams, operations, or business units. This flexibility ensures that everyone gets the relevant information they require to make informed decisions. Managing digital and physical borrower data seamlessly is crucial, and that's where configurable workflows come into play. They help us streamline and manage both types of data efficiently, reducing manual effort and minimizing errors. All of these elements come together in our unified data flows, creating a smooth, integrated process from data collection to decision-making. And ultimately, the value proposition here is clear. Mannjal's infrastructure solution offers a robust foundation to optimize underwriting and approval, making the entire process more accurate, faster, and more adaptable to your specific needs. This is how we can truly enhance your lending operations with intelligent, integrated technology. These metrics really highlight the tangible efficiency gains we've achieved with Mannjal's infrastructure approach. What we're seeing is a strong operational ROI, which means the improvements in our processes are translating directly into better results. For example, our approval rates have gone up significantly, thanks to enhanced data and streamlined workflows. This allows us to approve more loans faster, reducing bottlenecks. Speaking of speed, the sanction ratios are now sitting comfortably between 85 and 90%, showing that a much higher percentage of applications are being successfully sanctioned. And perhaps most impressively, we've cut down the loan processing time for lenders using our platform by 50 to 75%. This faster turnaround isn't just a number. It means lenders can serve their clients more quickly, increasing satisfaction and competitiveness. All of these improvements demonstrate a transformative impact. They validate our systemic approach to tackling lending challenges and reinforce how innovative infrastructure can drive real, measurable change across the board. On this slide, I want to highlight the early traction we've achieved even before closing our seed round, which really confirms strong validation from the industry. You see, our focus has been on priority sector housing credit distribution, a critical area for affordable housing finance. This includes secured lending with property collateral, commonly known as loan against property, which provides stability and security for lenders and borrowers alike. We also support working capital needs for MSMEs and small enterprises through unsecured business loans, helping these vital businesses grow and thrive. These loan categories are now fully enabled on our platform, making it easier for financial institutions to serve their clients efficiently. Speaking of institutions, we're proud to say that a growing number of financial institutions, over 75 partners, are actively using Mannjal's infrastructure to process loans. Since our launch, we've handled a total loan value exceeding 75 crore rupees, which demonstrates solid market traction. In terms of disbursements, we've supported over 1,000 crore rupees in funding, highlighting the trust and confidence in our platform from both lenders and borrowers. All of this, these 18 months of validation, shows that our approach is resonating strongly within the industry, setting a solid foundation for future growth. Let's take a closer look at why this opportunity is so compelling. First, priority sector lending is actually a regulatory mandate, which means it helps ensure that there's a consistent market need. This creates a stable demand environment, making it a reliable area for growth. Our platform architecture is designed for scalability, allowing us to expand easily across multiple loan products and lender types. This horizontal scalability is key to adapting to different market segments and increasing our reach efficiently. We've also demonstrated a clear operational advantage. By reducing turnaround time by 50 to 75%, we show a strong value proposition that improves efficiency and customer experience. In addition, our full-stack infrastructure creates deep integration within the ecosystem, making it quite difficult for competitors to displace us once we're embedded. This stickiness builds long-term value and customer loyalty. Finally, India's credit inclusion gap presents a massive addressable market. With supportive regulatory trends, the potential for growth is enormous. All of these factors together form a compelling investment thesis, highlighting why investors see such promise in participating in this opportunity. Let's now look at our strategic roadmap for scaling beyond the seed stage. First, we focus on improving field operations efficiency by enhancing our sanction ratio improvements and maintaining TAT reduction. These are critical for speed and accuracy in our lending process. Next, we prioritize client retention and increasing our net revenue retention, or NRR, because keeping existing clients happy drives sustainable growth. We also track monthly disbursements processed and lender onboarding velocity to ensure our operational momentum stays strong. Moving forward, we identify success metrics that matter most, like expanding where our credit penetration gaps are largest, especially focusing on Tier 2 and Tier 3 markets. To serve these segments effectively, we've developed different pricing tiers tailored for various lender categories, adopting a SaaS model for scalability. We're also co-creating templates for key sectors such as agriculture, MSME, and microhousing, which helps streamline our offerings. Our sector workflows include integrations with bureau data, GSD, and bank statement analyzers, making the underwriting process more comprehensive. Additionally, we're building an API ecosystem to connect seamlessly with other platforms and data sources. Our AI integration includes predictive underwriting and fraud detection capabilities, enhancing risk assessment and operational security. To expand our network, we aim to grow from 75 to 200 lenders through channel partnerships, leveraging these relationships to accelerate our outreach. Finally, this all ties into our strategic roadmap for scaling post-seed, ensuring we're building a resilient, scalable foundation for sustained growth. This comprehensive approach positions us well to capture new opportunities and serve our clients more effectively as we grow. Mannjal is uniquely positioned to reshape how credit is delivered in India, aiming to become a critical infrastructure for the lending ecosystem. By focusing on demonstrable metrics and market validation, we're able to drive successful fundraising efforts that support our growth. One of our key strategies is aligning investors with startups, creating a strong partnership foundation. We're also developing infrastructure-as-a-service solutions specifically for financial institutions, which helps us build defensible competitive moats, meaning our solutions are not easily replicated, giving us a sustainable advantage. Business model innovation is central to our approach, supported by our MBA learning framework, which ensures we stay agile and informed. Technology plays a crucial role in enabling financial inclusion, especially by improving credit efficiency in priority sectors, areas that need the most support. We aim to create impact at scale by making operational improvements through end-to-end integration of field operations and decision systems. This allows us to streamline processes and make smarter, faster lending decisions. Our workflow innovation involves moving beyond just consumer-facing apps. Instead, we're building deep institutional infrastructure that powers credit distribution at a larger scale, making the entire process more robust and reliable. Finally, the strategic shift we're emphasizing is clear. It's about infrastructure over apps. While apps are important, we see the real value in creating a strong, scalable backbone that supports the entire credit ecosystem. This is where the future lies.